Following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 30th fabulous Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary day and an extraordinary weekend. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. You and I make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they're communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now's not too soon. 877-927-6648. Of course, internationally, 727-445-1044. Of course, you can email me, steve@tfn.com, and Inside the Tiger's Den, just like TKC did a little while ago. You can instant message me, and I'll be happy to take a look at anything that you'd like, any time frame, and review it for whether it's a short or a long position or neutral, whatever it might be. So let's go ahead and get this show started on Ryder Cup Friday. 4-0 is how the U.S. team has fared during the morning matches. So let's see if they can continue that momentum. And speaking of momentum, we'll check out the momentum inside this market. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow traded up 187 points, trading out 18,330. Now, you called this yesterday. You told me, you said, Steve-O, if the market finishes poorly, we have a one-day rate of change in that VIX index of greater than 10%. Be careful because the market is going to bounce or bottom. You told me that ahead of time. You told me that you knew how to forecast what the market was going to do next. Kudos to you out there. The S&P trading up 19 points, trading out at 2170. NASDAQ, how's it? It doesn't feel good to not be the Heinz ketchup, but be able to anticipate what the market is going to do. That's exactly what you did. That's exactly what we do out here. You've got the Russell 2000 up 12 points. The NASDAQ Composite up 45. Gold is down 6. Silver is up a nickel. Light sweet crude is up 27 cents. Leading the charge here to the upside, Mettler Toledo International up $10, 2.5%. Amazon up $9. Costco up 6. Biogen up 5. To the downside, Vectrus Inc. off 45%. No idea what's going on there, other than it's just got didn't get it. It's not a haircut. That's a buzz cut. When I get a haircut, it doesn't come off 50%, right? You've got, probably you don't as well, you've got Ophtho-Tech. Ophtho-Tech down 15%. Regenerate Pharmaceuticals, that's off about a 1.5%, 6 points. 11% to the downside is Cognizant Technology. So my system is, believe it or not, still booting up here. So I only have some charts for us to take a look at. But let's do this. Let's do just like we did yesterday. There is nothing different today than really what we looked at yesterday, other than saying, hey, let's take a look at where we're at from a weekly perspective, right? You know, and if you take a look at the Dow out here, we are up for the week. We were up, above last week out here. Does this look, so with regard to the Dow, does this really look bullish or bearish to you? I should say, does it look bearish to you? Maybe so, from the standpoint you can see that the top was made out here the week of August 15th. You can see a little bit of a descending trend line out here. You know, that's pretty easy to draw if we do that. You know, that's what this looks like right there. So right now, today's action, This week, certainly not bearish. And this suggests that maybe you're going to go see a test of that high. That's the Dow. If we take a look at is there anything really to get crazy about out here? No, probably not. Not at least with regard to the Dow. If we let's take a look, however, at the NDX 100, a different story, a whole different animal. Is there anything that looks bearish to you about this stock chart here for the NDX 100? I mean, really anything. From a weekly perspective. And the absolute answer has to be, there's only one answer out here. The answer is no. Here is really your line of resistance, if you will. That's at about the 47.39.75. That's the last time we have any type of bearish real consideration. Okay, if you want to get real technical, we could go right there as well, 48.39.59. We're trading above it. What does this say? Yesterday, as a subscriber reminded me this morning, and apparently I said the word guarantee, and so I need to follow through on my guarantees out here. I guaranteed you that the market, and specifically the NDX 100, was going to go ahead and make a new high. That means it just has to get above 48.95.50. You're at 48.77 right now. So it just has 18, 19 points to move to the upside out there. And although as much as I'd like to guarantee things out here for you, I really can't give you, the guarantee has to be somewhat qualified. But it's a pretty good guarantee, is it not? First of all, is there anything inside this NDX weekly chart that we are looking at that looks bearish out here? Anything whatsoever? The absolute answer is no. It is unequivocal. The answer is no. If we want to really go ahead, because today is September 30th, if we really want to take a look at things out here, why don't we just put this on a quarterly chart? And here's a quarterly chart. Forget about those resistance zones on the daily or those or weekly resistance zones, which have been taken out. If we take a look at the quarterly chart, here's what you can see. It's over the 100% move. It's over the 2,000 highs as we finish out the third quarter in 2006. Well, I don't know. Where you could get a rejection. You could see a close below 48.1635. But short of that, you're getting a message here of what? Yeah, breakdancing. Breakout city. Now, that's in the NDX 100. If I take a look at the larger NASDAQ, the composite out here, so we take a look at about 3,000 symbols. Not the kind of symbols that clamor out here. Quarterly basis, where are we? Above 2,000. We're above the 2015 highs out here. Is there anything about the NASDAQ composite chart that looks bearish to you? The answer is no, nada. Doesn't exist. If we take a look at the New York Stock Exchange, let's do that, because people write me all the time and say, this chart looks bearish. Now, this is a quarterly chart. Really? Really? Come on. It doesn't look that bearish out there. People will say, hey, well, what about the Russell 2000? I say, what about the Russell 2000? Quarterly basis, is that a beautiful hammer or what? That is the first quarter of 2016, as the market had been pushing lower out here. So from a quarterly basis, you're trading inside of the swing point here from April of 2015. Says it's going to go test the high eventually. That's 1250.99. Shoot. No, that couldn't be it. 1295.99. I knew I had just misread something out there. 1295. Very likely that is what's going to happen inside the Russell 2000. That's a quarterly basis. If I go ahead and put this on a weekly chart out here, does this really look bearish to you, the Russell 2000? And the answer is no. Now, it's got some resistance, most certainly, and I'm just trying to give you a longer prognostication. I'm not trying to tell you what's going to happen inside the Russell 2000 over the course of that's going to be interesting. All my other charts are not opening up. That's something for me to deal with during the break in about 5 minutes. I'm not looking at it on a daily or an intraday time frame out here. If we go ahead and we put the daily chart out here, you've got kind of a sideways-ish move. But really, the message is, when we put these things on a weekly chart, the message that I want to get across to you is just simply that there's nothing to really get your skirt going to the upside or to the downside out here. You take a look at this week's action, the Russell 2000, barely any movement when it comes to the end of the trading session. Not that end of the day BS out there, but the end of the trading session. The actual open this week inside the Russell, open at 1253. We're trading at 1249 right now. A lot of, rattling and rolling, but really not a whole lot when we take a look at the real essence of price is the body of the candle. And last week's body of that candle looks muy bueno out there. So that's what's there. So the perspective with regard to what the markets are going to do. Has anything changed since yesterday? And the answer is no. Has this big bounce changed our viewpoint from yesterday? The answer is no. You anticipated this. You saw the moves out there. Although I wish I could show you that chart. Now, we'd really have to do that I'll do that during the break. I'll go ahead and try to pull up those other charts. So I'll save the next few minutes. We'll take a look at some individual charts. Let's go ahead and help out TKC inside our targets den. He or she, I don't know TKC, I apologize. And it doesn't really matter, right? But if we take a look at CHK for TKC out here, TKC, what's TKC? Probably your initials, I would imagine. Yeah, boy, that's a really wild, what kind of guess out there. But if we take a look at Chesapeake Energy out here, let's really get right to it. We can see that this thing has been in what we'll have to definitely call a downtrend. Now, it may be forming it may have formed a bottom out here because we are now starting to see what? Just simple higher highs and higher lows out here. So at this stage of the game, that's what it looks like to me. Are you looking for he or she looking for a long position out here inside of this equity? So let's go ahead and on the pullback, this is a weekly chart. Let me go ahead and switch this to the daily time frame and try to get a feel for what Chesapeake might be doing. And we're going to go ahead and add our market profiles. That's going to be the easiest thing for us to do is take a look at our market profiles out here. And what's this going to show us? This is going to show us both our daily and our weekly profiles. Now, here's what we can see. We can see that price is below a level of support at 642. That was a daily profile. So with regard to a long entry, TKC, I would say these are the two price levels for you to be focused on and looking at. 577, you're at 625 right now, and 509. If you're looking for a long place, let's add volume on this chart. Get a feel for what's been going on the retracement on this pullback out here. I see yesterday was kind of a highish volume day. Never took out a swing point or anything. So, not a ton of release of information. Of course, it does suggest that you would test the low of a couple days ago on September 27th, that low being about 597, not that far away from the 577 number that we gave to you. So I would be looking for a long position. I'll tell you the ideal number. The ideal number is $5.09. And the reason that Stevie gives that to you is because both the center of the weekly box and bottom of the weekly box, that is our TAS market profile, both of those line up at 509. If 509 doesn't hold that support out there, then get out of Dodge. We'll go ahead and take a look at the swing points for you back in the level of May 23rd, down around the, around the 356 level out there. So that's what I would be taking a look at. ES90 has to be staring at close. Yeah, I'm not sure, Gator, if you're talking about this or which chart you're talking about. And if I had my other charting system out there, that'd be a whole lot easier for me. I don't pay attention to that 9-period EMA. Instead, I look at something that helps me understand when that price oscillator is heading up or down. So TKC, that is my take on Chesapeake Energy. Ticker symbol there is CHK. When we get back from this break, I believe we're going to break, although I don't hear anything in my ear. So, Steve-O, you got to give me the high sign out here because of our late. There we go. I hear the music. We get back from this break, we'll go take a look at some other charts as well. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 172, S&P 17, and NASDAQ Composite 42. For those of you that weren't in the audience yesterday, that weren't identifying what the market was going to do, what to be looking for, the others that were here at TFNN before we went off the air, we're saying, hey, look, here's the deal. If the market closes poorly yesterday, and by poorly we defined it as the volatility index, if that's going to have a one-day rate of change greater than 10%, you specifically said to me, anticipate a bounce or bottom today. In fact, the decision was if you are short the market, that's your indication, especially if you're trading the ETFs out there, to get out of Dodge. We said chances are, and it was a high degree of chance, okay? It wasn't like 50-50, let's toss a coin. It wasn't 60-40, like maybe you're really good at tossing a coin. It was more like 85-15. And now you trade the futures, it's a little bit different. You could have held on until what? What you said was wait for that seventh wave move to the downside to unfold. And voila, that is exactly, you could not have been more accurate to have waited for that, which was at 3:30 this morning. If we take a look at the NQ, in fact, let's do this. It's a little bit better because it really shows, that's what the NQ was showing. Hey, guess what? So was the Dow, right? The weak link inside the chain out here. And we said, let's pay attention to the NQ because it's been the strong dog. And a strong dog on a 30-minute basis, it gets that seventh wave move, it better hold. If it doesn't, you're going to beat the living, daylights out of it. But it really should hold. That should be the indication of the completion of a retracement inside. And that's exactly what has transpired. Now, in the case of the Dow futures, just to show you how this works here, 7 waves to the upside. Here, because I have both numbers and measuring different, not really waves, but momentum moves, not to confuse it, we've gone ahead and converted back to the letter format here. So 7 is letter G in the Funkin' Wagnalls alphabet out here. And you can see that that made the most recent high on a 30-minute basis, just as the low from earlier this morning was also a 7th wave. Price was also moving lower due to less energy out there. You didn't really have the bulls show up from a bullish standpoint, not until about, what was it, around 8 o'clock, 7:30? 7 o'clock. 7 o'clock this morning when they showed up and formed that nice little bull sash out here. 18,199 on any retracement. And we ought to see a bit of a retracement here at 18,223. So, 190, that's probably going to be another 30 points. And, the bears are going to get excited about that, just like the bulls are excited about this moving to the upside. Neither party, and this is what we said yesterday, neither party should be that excited out here. If I sound excited, how would you like me to do a show and just sound monotone? Or I don't even know how to do that. You would have to actually show me how to not have enthusiasm, energy, or I don't even know how to really. I am dead serious. I do not know how to have no passion. I just really, now there is a method of having no passion in life. You've seen people like that. I just don't happen to have that switch where I can throw that on. Now that I hope is a benefit to you, but I don't ever want you to misread whatever it is I might be saying out there. But anyway, I don't even know how I got off on that subject matter out here. That red line, 18,191 happens to be the price oscillator on change line. So moving down, testing that, finding support, that would be pretty good. You might say, well, what happens, Steve, if price breaks below that? I say price breaks below that and go test the next level of support. 18,175, then 18,125. It may never get down there and test that. It's just that. But what I want you to know, what I really want to share with the others that are listening, because you were the one that called this market ahead of time. It wasn't me. You were the one that called it. You knew what to anticipate and to look for. And I just want to be able to share with others what you were able to do and why you did that and what you accomplished. With regard to waves to the upside right now, we're in the fourth wave. But you can see it's made it all the way back to the top. Right? When a market does that, that's what I don't know if Tom is the one that is credited with this. I'm going to give him the credit for it, and hopefully you will as well. That 100% move of a move. Whether it came from somebody else or not, it really doesn't matter. But 100% move of move. That means the move to the downside, that began here at about 1 o'clock in the morning. This is yesterday. Now price basically has made it all the way back up there. That is a strong move. Should there be a whole heck of a lot more left in the move higher today? Maybe, but it doesn't really have to be. That's a pretty gosh darn strong move since 3:30 in the morning out here. With regard to all of the other oscillator readings out here, because of the chop, fizz, oh, what a relief it is not out here. Take a look at advanced decline oscillators. Hey, look, they're to the upside again. They're back above zero. We really have a complex structure that is going on with regard to that. I will save you the time, meaning we won't even go into the discussion about that. And we're just going to kind of shelve that as a indicator right now with regard to the tug of war. Who's winning the battle, bulls or bears out here? We're just not going to play that game. That's not the same thing with regard to how you and I are going to go ahead and play the game with regard to the volatility index. The volatility index is below the 50-day exponential moving average. That is a more important factor for you and I, because when it is below, it says there's plenty of liquidity. That, by the way, is priced out at 1383. We're trading at 1302. I see a question in the den says, SR, do you have any confidence where the December S&P futures contract heads into next Wednesday or so, 2060 last? And the answer to that question, if I were going to provide an answer, which I have to, right, because it's been asked. I mean, that's really what we have to do. Here's the answer. We're playing the Oingo Boingo game out here. Speaking of Oingo, have you ever played that game in golf? Really good friend of mine. I don't remember how to play because it's been many years out there. But there is a way to play that. That is, in essence, what the ES Mini is doing. And it just hit Oingo. Oingo happens to be the top descending channel line out here. Boingo happens to be the bottom rising price channel line out here. And to answer that question, Mr. Z, if the ES Mini can bust above Oingo, then it will not go to Boingo. How do you like that? How do you like that? I just had pulled that out of, I did just pull that out of there, and that's why it really didn't sound that great. So the answer to your question is, if, in fact, the ES Mini is unable to get above that descending price channel line, it will go back and visit the bottom of the support line out there. Yeah, that'll say it's going to go from 21.57 probably down to about 21.38 or so. And this just happens to be the trend that is in place. This is these are the trend lines, or the channel lines that are out here that have contained price to the upside and to the downside. We're starting to get towards the apex of that, but until we see a break really one way or the other, this, by the way, is a 5-hour chart that we're looking at. Now, what I will say is that if price can break above the descending price channel line, then logic says, well, you're at least going to go test 21.72. That's going to be the swing point from September 22nd. And if you can get above that, then you're going to go all the way back to September 8th and get up to that 21.81. And then what that says is really on the daily charts, you go back and you actually make a new high. It's the NQ out here, Mr. Z, that I have more confidence in, and that it's going to go test those highs. You want it on that wall, which happens to be the price level of 48.92 and a quarter, so just above that. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, sometimes I absolutely make a bonehead move out here. I thought I was in a different spot on my charts out here. Couldn't figure out why I couldn't find one of my switches, but I went ahead and added it. And it's because I hadn't actually changed areas out there. But in any event, one of our denters, Duffy, wanted me to go ahead and take a look at that ticker symbol AG, First Majestic Silver Corp. Yeah, I'd asked a question to him. AG is a highly popular silver stock. They're all pulling back now. Perhaps I'll just watch for a turn at the 0.618. I had asked Duffy because he was looking at AG, and you can see that the pullback here, and since he mentioned retracements, let's just do this here just so I can show you what I was looking at. If we just simply go from the bottom to the top, you can see it's about probably a 50% retracement. I don't utilize a 50% retracement. Doesn't mean that you shouldn't. I'm just saying I don't. And it looked to me like this is retracing much quicker than other stocks. And I'll just simply use Pan American Silver out here as an example, because if I take a look at its retracement from low to high, you'll see it's not even down to the 0.382 retracement. Now, the reason, Duffy, that I threw that out there was you're looking for a long position inside a mining equity, and they are all pulling back. Absolutely, you've got that nailed down. But the question I would pose back to you is, why wouldn't you look more at Pan American Silver versus going ahead and taking a look at AG? Pan American Silver's in the $17 range right now. You know, this is in the $10 range. I don't think it's a price thing. That just changes the number of shares you have. But nonetheless, I still want to be able to answer your question with regard to AG, although I throw out there the idea of when the market turns, instead, and if you're looking at silver stock specifically, instead go through and do an analysis of the silver stocks and try to find the ones that have held up the best, because those are the ones that could actually be setting up the very powerful C point of an A to B equals CD to the downside. Now, speaking of that, it's a possibility that there is an A to B equals CD to the downside that is setting up inside of First Majestic out here. And I always liked that movie. Was it called what was it, Majestic or something like that? Who that was who was it? Jim Carrey, right? Jim Carrey was in that. Was it called Majestic? Something like that, right? The Majestic Theater. So now I'm getting somewhere, but that was probably not the name of the movie, although maybe it was. But I enjoyed that movie. I enjoyed that movie when he stood up to Congress. Didn't you? Did you guys ever? Mr. Majestic, yeah, Mr. Did you like that movie, Danny? Didn't you like it when he just finally stood up, inside that movie to Congress? Don't you think the Stumpelmeister, was thinking, God, he would love to. He would love to have just a little bit of Jack Nicholson in him. Of course, he knew by doing that, he could kiss goodbye, his keister out there if he were to do that. Now, the A to B equals CD to the downside, you don't want to hear this. Or maybe you do, because you could really buy this on sale. If it really did complete an A to B equals CD to the downside. By the way, the B point has been passed, but on lighter volume. The B point will be September 1st, 18 million shares. You're down below that with less than 18 million shares by a long shot out here. It doesn't mean that it can't move back to that area, but it most certainly can. 570 would be the number to actually go ahead and pay attention. What I want to show you is what took place as AG, First Majestic, was making its high out here, because there were two different pattern signals that gave you an identification that a top was being put in. Number one, price was moving higher, doing less relative energy. That's the black diagonal line you see on my screen out there. As it was doing that, you had a nice big old bearish engulfing candle that formed on the trading session that called that top out here. That was on the trading day of August 10th. And then you had a Tom DeMark sequential count that took place the day before that. Price getting below that oscillator unchanged line. That's the red line that is on my chart out here. So everything really, in check here for First Majestic to continue moving lower out there. So try to identify a spot. Well, one spot would be 570. That's your A to B equals CD. Another spot you identified, 880. Now, what you also have in the 880 range out here, and I'll go ahead and get rid of the retracements, is you also have a bit of a breakout, and that is right here at the gap to the upside that occurred. That was on the trading day of April 18th. That's at about 857. So you want to go ahead and pay attention to those areas. In doing so, you certainly want to make sure that you are timing whatever gold and silver are doing. And that's especially silver in this case. You want to be able to go back to silver, take a look at what it's doing. This is the weekly chart for silver. If we put the daily time frame chart for silver out here, silver says that if it breaks below this little short-term trend line out here, it too has its own little wedgie that it has formed out here. Then you're going to see 1885 get tested, then maybe 1860 if it breaks below that. Then what you're looking at is right around the 1750 mark. 1750 ought to be, doesn't say it will be, says it ought to be a very strong level of support out here, because that is the longer term rising trend line area inside of high ho silver. Danny never saw the movie Mr. Majestic. If you haven't seen it, it's a chick flick for the most part. But guys, we have to, and I don't mean that in a negative way. I guess you have to be. Is it terrible? You got to be careful these days, supposedly with regard to what one says. You know what I mean. I don't have a negative bone in my body out there. In any event out there, it is if you're just sitting around, it's a rainy day, it's cold or something like that, then you see it's on Mr. Majestic. Go ahead and watch it. It's actually, Jim Carrey plays a pretty good role in that. In any event, you'll like to fast forward to the part where he stands up in front of those bullies, those congressmen and congresswomen out there. And it was disgusting, quite frankly, what they did. They were just as bad as this banker guy, that had no clue as to what was going on inside his organization. Actually, how many branches is it that he has to oversee out there? Do you know how many branches? Thousands, is it not? Thousands out there. In any event, let's continue on with the markets out here. If there's another question that was posted in the den that I didn't see, would you be kind enough to repost that for me? And in the meantime, I'll check out my emails, just see if there's anything that is coming there. Again, I got to look over the weekend, see if there's some way for me to get past this double crunching way of having to get into my emails now on my phone. I do not like that Apple upgrade. I don't know what they were thinking. I think the answer is they were not. Steve Jobs would never. He would be like you or me, sitting by my phone, want to see what's going on, and say, "Who in the heck programmed this in there?" So okay, I don't see anything in there. But ask it, could I review the 4 ETFs? I can do that. What's the time frame, Mick, that you're looking for with regard to taking a look at the 4 ETFs out there? Let's just look at the only time frame that matters, okay? The only time frame that matters out here. That's the weekly time frame, right? The weekly time frame. And daily. Oh, Mick said daily. Mick, wrong answer. Sorry. Okay, I guess we can look at both for you though. But if we look at the daily, which I'll do, I don't really get a whole lot of information out there. I see these ETFs, the Qs, the IWM, the SPYs, the diamonds. I see them as basically futile, as providing us with no significant information. Number one, it's missing out the majority of the trading day. Number two, the volume characteristics and everything, they're not working. They're just not working. Hey, the Qs, you've got volume at September 22nd at 22 million shares. You've done 13 million today. You're probably going to close inside it. It should go test the high, 119.22. That's my take on a daily basis. We'll be right back, folks.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So we're taking a look for one of our dinners at the ETFs, index ETFs out here. I say they're basically not worth a whole lot these days for providing you and I with much information. If we're going to use them like we could in the old days, you know, moving into swing points to the upside or the downsides, or moving up or down with volume, we'd get a whole heck of a lot of information out of it. If you were to trade based on that information alone and going long and short the marketplaces, you'd get killed. You'd just absolutely get crushed. So that information, and I can't tell you if it's because of electronic trading, machine trading, arbitrage trading. I can't tell you what it is about the way that the volume behaviors inside of these ETFs, index ETFs, are. I'm just saying they're useless. They're useless to me. They would not have called the bottom that was taking place yesterday. They would not have called the top that took place the day before. They just wouldn't. They just, you know, I haven't found a way where they could actually do that. You know, and I study these markets. We talked about passion. I've got a passion for these markets out here. I can tell you, if we could rely upon them, you know, this would tell us you're just at least going to go test the high of September 22nd inside the Qs. That's what the daily would show out here. If we looked at not the Qs, let's just look at the SPY. You know, okay, so you got 500 stocks out here. Now, of course, what this would be telling us, let's turn off. Now, the market profiles, they're helpful. I do find these to be helpful with regard to the index ETFs out there. Really helpful being able to identify levels of significant support and resistance out here. And so support says you got 213. Real key level of support. Why? You've got the point of control at 213.69, closer to the top of the box. Says really strong support. You can see where it's trading into right now. Let me turn off the weeklies for you, because this will be helpful to you with regard to the SPYs. So I'll turn off the weeklies. Those are the green lines. So now those are off. And so I would say, Mick, on a daily basis, if the SPYs were going to communicate anything to you, and it's not, I'm not talking about a penny or two or something like that, but any significant close above 216.46 out here says you have now cleared the resistance zone of the daily profile. And that says, yeah, now the weekly ought to take over. And now I have to go ahead and repopulate and put the weekly. What's the message of the weekly? Message of the weekly says you're going to go test 217.09. I don't know what's going to happen at 217.09, Mick. I just know that the message here is just going to go test it. I know we've got the downdraft from September 9th out there. You know, big volume to the downside. The top of that is 217.03. Ordinarily, one would say, hey, that's where it's going to find resistance because that big gap to the downside. I'm going to say hogwash. Not the case. Doesn't have to be the case. You know, because these volumes are just not reliable inside of the spot. The other patterns that you and I took a look at, price moving higher or lower, doing less relative energy, less relative strength, the seventh waves, those are providing the better turning signals for you. What this does tell us with regard to market profiles is that when it gets up to 219.60, that is the top of the box out here. That is the top of the most two recent highs, August 15th and August 23rd. It ought to find some pretty significant resistance out there. So that's what now the weekly chart, okay, the weekly chart, this is what it says to you. If we were going to go ahead and use volume analysis, let's get rid of those profiles, right? We don't need that. And so if we just use basic lightning bolt tools out here, here is your swing point, Mick. It's right here. It's a trading session of June 6th. June 6th at 212.52. You can see prices trading above that level. That is our B point of an A to B equals CD. You don't like that B point and you want to go ahead and use this one right here on April 18th, we can't do that. Why? Because we have a lower low. And where that lower low came to, we also had a higher high. There's your volume, June 6th, 379 million shares. Passed with what? Volume, 460 million shares. You know what the A to B equals CD, that's confirmed here, gives you a huge price projection, 230.08. I don't know how reliable it is, though. Steve Rhodes with TFNN. We'll be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.